We are live.
We are live. Make sure it's showing on Facebook. Hold on. I don't know why I keep doing that. All right. It should be now. Cool.
Yeah, it is.
Cool. Welcome in the room. Welcome back to the Growth Hour. It feels like we took a little vacation, but we didn't though. I'm refreshed since last week. My voice is still raspy. Melissa, I am happy to see you
Yes.
today. So yeah, tonight is part two of discussing about insurable interest. Before we dive any further into that, welcome to the Growth Hour podcast, where our mission is to enhance financial literacy and promote wealth building. Now, in each episode, we will dive into the world of personal finance, sharing valuable experiences, practical examples, and in-depth insights on what to do and what not to do when it comes to managing your finances. So we want you to join us as we explore the topics of budgeting, investing, saving, and so much more in an engaging and informative manner. That's important. We want you guys to be interactive with us on this podcast. It doesn't matter whether you're a beginner or an experienced investor. Our aim is to empower you with the knowledge and resources so that you can make a smarter financial decision. With the Growth Hour podcast, get ready to embark on a transformative journey towards achieving your financial success and building long term wealth. Now, that this is something that sounds interesting to you and you are ready to start your financial journey, please make sure that you like our page, like the Growth Hour, comment below, share with 5 people, and continue to, as we build this community, in hopes that you continue to support us and take some knowledge away from these episodes. Get your notebooks, take some notes because the information is definitely valuable. Now, I do want to go over a disclaimer here on the Growth Hour because it is very important. The information that we provide here on the Growth Hour is for educational and informative purposes only. It is not intended to be formal financial advice and should not be relied upon as such. The content shared in each episode reflects the personal experiences and perspectives of our hosts and guests. While we strive to provide accurate and updated information, financial circumstances can vary greatly from person to person. Therefore, it is extremely important to note that the strategies, examples, recommendations discussed may not be suitable for everyone. If you are seeking personalized or tailored financial advice pertaining to your individual situation, we highly recommend scheduling a consultation with the person who invited you to this podcast. They can provide guidance based on thorough understanding of your financial goals, risk tolerance, and overall financial picture. Remember, taking action based solely on the information obtained from the Growth Hour podcast is done at your own risk. We encourage you to seek professional advice before making any financial decisions. Now that we got that out the way, we know why we are here. We're jumping back in talking about insurable interest, and I'm excited. It's a very important matter to discuss as you're building out your financial vehicle. And Raquel is going to go ahead and take us away into this topic tonight.
Hey everyone, thank you for tuning in. And we're so happy to have you back, Melissa, to chime in on this topic. Hear your thoughts, comments, questions, and concerns as well. So let's dive right into it. What
Yeah, I'm
is
super excited to be back.
great. What is insurable interest? Now, for everybody who missed last week's episode, we'll go over it again, for everyone who missed it. And just a reminder so that if you did see it last week, you are definitely well informed and not confused at all. So, what is insurable interest? Insurable interest refers to the legal and the financial stake that an individual or an entity has in an insurable property or life. So in insurance terms, it means that you must have a valid, tangible interest in something or someone that is being insured. This interest serves as the basis for acquiring an insurance policy, and it establishes a relationship of trust and responsibility between the policyholder and the insurer. Melissa, can you give some real life examples of insurable interests?
Sure. Here are some insurable interests. Some of the most common ones are insuring your cars, um, insuring your home. Say that you have a mortgage, you want to make sure that that home is insured in the case of something happening. You have some indemnity in place to make sure that you can face that adversity. As well as you have life insurance. So you have people, who have a special interest, for instance, like the breadwinner of a home. They might want to have some life insurance on themselves in the case of something happening to them, that their family is, able to be taken care of. So those are some examples of some insurable interests.
Trina, you have any that you want to add?
Well, I know that we forgot our icebreaker, and it was in regards to what are some insurable interests that we have right now in this moment. And when I had to think about it, a lot of times, I always say my children, right, to leave a legacy for my children. But as I think a little deeper, my insurable interest would be my partner, right, my spouse. Why is that? Because we are a team. We bounce off each other. This is what makes the household work. So God forbid if something was to happen to my spouse, I think about, well, then how will that affect my household, not only emotionally but financially as well. So that would be an insurable interest right now in my point. Your spouse, the baby mama, baby daddy, anybody that is helping you in your household, that income is in your house. So if you do not protect that, if something was to happen to that person, then your entire family is affected by that.
Exactly. Exactly. Definitely forgot the icebreaker. Melissa.
I got you, girl. I got you.
Melissa, you want to answer the icebreaker question? What does your insurable interest look
Um,
like?
what my insurable interests? I'm sorry. Can you say that again?
What does your insurable interest look like?
Well, right now it's getting myself insured. I have 3 kids, so and I don't have any type of big savings, so I have to make sure that I have some form of insurance in place. If anything was to happen to me, as well as I always think it's good to always have renter's insurance in place too, because anything could happen when your home, whether it's renter's insurance or whether it's homeowner's insurance. Having some form of protection on your home is great as well. Anything could happen, even if somebody comes to your home and possibly get hurt. They might want to turn around and sue you, and so I think having that is also important as well. Or if a fire happens, you want to make sure that you're able to have that protection in place to be able to take care of those finances, because repairs could be costly, especially in this climate and with this inflation as well.
Definitely.
Exactly. So the next question we're going to get into is, why is it a vital component of insurance? Insurable interest. Why is insurable interest a valuable component of insurance? Well, it's valuable for 7 reasons. several reasons, not seven, several. The reasons are absolutely endless, but we're going to touch on a few of them. Um, Legitimacy and validity.
It's okay.
Insurable, insurable interest ensures that insurance contracts are entered into a genuine risk and legitimate reasons. It prevents individuals or entities from seeking insurance purely for speculative purposes or to profit from the misfortune of others. It adds credibility and validity to the insurance industry as a whole. So we touched on this last week. You can't you cannot get insurance policies on strangers when you know something bad is about to happen to them. You cannot get policies on people you know when you know something bad is about to happen to them. That's one of the ways that the insurable interest is a vital component to insurance. Another way is risk assessment and underwriting. So, insurable interest helps insurance companies assess and underwrite policies accurately.
Yeah.
By evaluating the level of interest and potential financial impact, insurers can determine the appropriate coverage and premium rates. This ensures that policies are tailored to the risk involved, maintaining the equilibrium between the policyholder's needs and the insurer's obligations.
So for the people who may not understand the insurance terms, how would you summarize that for people who are just blatantly, ignorant to the information? Because when I think about what you said, I understand it, but some of our audience may not know exactly what that is saying.
So basically, it's saying that the policyholder and the person insured, they both have to be of a certain standard. The insurer has to tell the truth about their health because there is going to be some health questions asked. It means that the policyholder needs to have insurable interest in the person insured and not be telling, stories about that, not making things up just to get the policy on the person. For the underwriting process, the underwriting process is where it's like the FBI for insurance. They investigate everything to make sure that they are safe. They're not going to give you a policy knowing your plans or have some type of malicious intent.
So, right. They have to make sure that they mitigate their risk.
Exactly.
Yes. Because to insurance company, they are looking to making sure that you are insurable interest to them.
Yes.
That's what people understand, that people, you can't just, everybody cannot get insurance.
And that's exactly why we're here, to break it down to you.
And that's why it's very important to get insurance at a younger age, because, when you're, most times when you're young, you're in better health. You don't want to wait until, say, you get, for instance, diabetes, and then you go looking for insurance, or cancer and you go looking for insurance. It's probably not going to be attainable, or if it is, it's going to be super expensive.
Yeah. Super expensive. And people oftentimes, real story. So I was on TikTok live yesterday, and the person that was chiming in, one of the guests, was 28 years old. Unfortunately, she is taking dialysis 3 times a week. She receives disability. She only has a whole life policy that her grandparents created for her. And I'm bringing this up because a lot of times people say, well, my grandparent, my grandmother has it, my grandfather. When you become of age, it's important to ask for that policy to make sure that, of course, you're still insurable interest, of course, to make sure that you're still protected. Because what happened now is, now that she is sick and has dialysis 3 times a week and only has a whole life policy, that's not a good plan for her right now because she's not able to work. So definitely making sure you, as the insurable interest person, is properly protected with that. Don't just allow someone to tell you what they have. Make sure that it's aligned and everything makes sense and it's going to best benefit you because you are the insurable interest. So I just wanted to share that story because I was really heartbroken. I was like, man, what can I do to help this person? But in actuality, once you have a sickness to that extent and you have no savings, you have no income, there is nothing we can do. Sadly, but it's true. Had
Yeah,
to put that. I see y'all now. Like, yeah, it was real. I was like, ugh. I was like,
that's
there's nothing that we can do. Like, nothing. You already have a terminal illness. Now, if they would have, took action beforehand when they were 22, then things may have been a little different. But I was kind of shocked when she mentioned that the banker told her at 22 she was too young to get insurance. I think we all said yes. And this is why your banker is not licensed. Your
I was
banker,
about to say, what even gave him the right to speak upon her insurable needs?
right, you're not even licensed. Your banker maybe just went to school, whatever the requirements were, qualifications, and they promote the bank's product.
Exactly. I actually have I have a friend, and she got all of her children insured as soon as possible because her first child, she got her, I believe, insured 2 weeks, after she was born, and then about 6 months or so later, she was diagnosed with cerebral palsy. So luckily, she had, that insurance in place for her daughter, because if she would have waited, she probably possibly couldn't have got that. And so all kids that she got them insured right away.
Yes.
Smart lady.
Smart. She recognized those insurable interests, right?
Yes, very smart.
Yes.
That's a crazy story. Like
Both
the
of them. You have
yes,
two different situations,
yes.
you know.
That's wild. That's wild.
I
So
believe she just turned 16. She's doing very good, but it's something that um that's not easy, to deal with her family. But she's a beautiful soul.
You don't have to mute because of the babies. We are all moms.
yeah, we
We
understand.
understand. And if you are watching and you hear the babies, we are moms. Okay. First and foremost, we have a life. We're still pushing through, no matter the adversities, no matter the distractions, because we have a purpose to be here to
Yeah.
create impact and share information. So that's why I always encourage, like, it's okay. Be you.
I don't want any type of distraction, anybody.
No, we can hear those insurable interests, those babies.
Yeah. Oh my gosh. Okay. So, what's the next topic? All
No,
right. So,
we're on the topic. What's our next question?
I believe
Ooh.
it's incentive for loss prevention. All right. And that's when individuals or entities have an insurable interest in the property, life, or asset being insured, and they are more likely to take preventative measures to avoid risk or minimize losses. This eventually aligns with interests of both the policyholder and the insurer. So it's promoting more responsible behavior, risk mitigation, which could ultimately lead to lower premiums and better coverage options. And that kind of goes back to my friend, taking those steps to make sure that she had all of her children insured at such a young age.
Yeah, definitely. Now, I do know that a lot of people may not know, insurance terms. So just
Yes.
to briefly touch, the policy holder is the person that holds the policy. The insured is the person, the insurable interest that you are protecting in that policy. The policy holder and the insurer can be different. For example, you may have a grandmother who's the owner, but she's protecting her grandchildren, her insurable interest. So
Right.
those are the insured. I want to make sure that we break things down in the simplest terms for those who don't know what all the terms mean. Like,
Yes. And also, the policyholder and the insured can be the same person. So
can be, yes.
you can have a policy on yourself for yourself.
Yes,
Yeah.
yes. With the loss prevention, with the incentive of loss prevention, I know we went over, the terminology of what it is, but I will always ask in simplest terms, Melissa, how would you explain that to someone who doesn't really understand all of that language that we understand?
I'm sorry.
No,
Could you
you're
repeat that
fine.
question? Could you repeat that question again?
I would say, can you make it simplified for those who don't exactly understand? What do you mean when you talk about incentive for loss prevention?
Incentive for loss prevention.
Mm-hmm.
So let me see how we put it down.
Yeah, we got to
So when
break
you
it
have
down.
an insurable interest in, I'll say, my life, I am the breadwinner. I take care of my family. My family depends on me. I'm a special interest to my family, so I want to make sure that I have some form of protection in place, like life insurance on myself, that in case of emergency, if I get sick or if I pass on, I'm making sure that, my family's way of living, they're what they're used to is not going to change. We're going to make sure that we keep everything in place. There's some form of indemnity. So they're going to be indemnified. It's going to be whole. It's going to be complete. They should be able to carry on for the next, say, 5 years. If I could have a plan to be able to have them to be able to take care of their food, take care of, of their expenses, school, all of that is in place. If I have a mortgage, I make sure that my mortgage is going to be also paid off in the set case of emergency. So I'm an insurable interest because I am the breadwinner.
Yeah, definitely. And it goes for business owners as well. Business
Yes.
owners who, you want to protect your business, especially if you have grew your business from the bottom and you really want to see your business around for the long run. Then you think about, well, your business is an insurable interest. How would it be protected in the event that you're not able to run your business to full capacity? So how are you going to protect that business? Do you have a business partner that is a asset to your company, that if something happens to that person, it would affect your business? That's an insurable interest. Property, purchasing land, homes, and it's more than just home insurance, right? Are you taking those steps to prevent any of those losses? All of those things are just like insurable interest, everything.
When I think of the incentive for loss prevention when it comes to a business, I think of a major corporation who has maybe 1,000 office employees, and they make a part of their workday, they make them exercise, or they feed them healthy food. Why? Because they are insuring these people. They are pushing them to live healthier lives, which makes their premiums lower because they're insuring them to make sure their business runs smoothly.
Yeah, that's just like those incentives that companies they have, like, oh, if you enter here, you can win up to $500 for the exercise challenge. It's been a
Mm-hmm.
lot of that going around because the company knows that you're an asset. The company knows that you're a insurable interest. They know that they need you in that position to run their business successfully. So this is why they incentivize with those programs so that you can, like Raquel said, be in a healthier mental state, physically, emotionally, and things like that. Like they're trying to pour into you with healthy foods and exercising challenges and things of that nature. This just came across my head. But what about the corporations that feed employees a bunch of junk, like a bunch of sugar? Donuts. Do they really care about you? Are you really a insurable interest to them?
How healthy were you when you started? Is the question.
This is
that's,
true.
that's the biggest question because that's when did your insurance kick in? Because if
Yeah,
you weren't healthy in the first place, mm,
right.
it might not make a difference.
But if you are working on your health, that's why it's also important to get those yearly reviews. Because, if your health comes better, you could possibly get you a better, a lower premium. So that's another thing why it's very important to also do your yearly reviews.
Yeah,
Definitely.
that was something that I asked. I definitely want, or I'm going to request the yearly review. I need to lower my premium. It's not high. I know that
But
it could
still, if you could get a better premium, go for it,
get,
Right. Because here we talk about budgeting, right? Realistic budgeting, saving, and investing. So
yeah.
if you can save anything and reallocate that money to maybe your retirement planning or anything that you want for the future to build your financial vehicle, then you definitely want to make sure that you're having those yearly reviews. And if you have a broker or insurance agent who's not doing that with you, you have a policy, but nobody is checking on you. Nobody is reviewing that. Are you really even an insurable interest to their business? Or did they just write you a policy and now they have disappeared?
They,
Right.
they they wrote you off. Yes,
That's
it,
red flag.
it's
That's a
time
red flag.
it's time to fire them if they're not checking in with you on not a daily basis, but maybe a quarterly, definitely yearly basis.
Yeah. I don't think I would have that issue. I'm checking on I have really built like this nurturing relationship with my clients. I know my clients. I know how important their insurable interest is, their business, their goals, and things of that nature. I check on them, and sometimes I just say, "I'm just calling you to see how you're doing. Don't
Hmm.
want anything, just to see how you're doing." But that is just one of the skills and something that I bring, not necessarily skill, but the genuineness, I should say, that I bring in my business. Yes, it's my business, and yes, my clients are insurable interest to me, but I'm also making sure that I'm taking time to nurture our relationship because people change. Your insurable interests will change within the next 10 years. How do you feel your insurable interest would change in the next 10 years, Raquel?
In the next 10 years, I honestly don't think it will change too much. Just because, my oldest is about to be 16, my youngest is 3. So it's just going to be a cycle, a cycle that's going to be repeated for all of them. And the cycle will be repeated for my oldest, but handed down. I'll still manage everything, of course, until I feel like she's, responsible enough.
Yeah.
But yeah, it's going to be a repeat cycle for the next 15 years for me at least.
Okay, very true. So right now, mine would of course be my family, but in the next 10 years, I do see a few properties that would turn into my insurable interest. My business will be thriving then, so that's something that would be my insurable interest. I don't think I'm having no more kids. I hope the Lord don't want me to have no more. But I don't know. I'm just playing. I'm just playing. I'm just playing. But yeah. So I know that in my future, in the next 10 years, besides just having my family, definitely business, definitely a few properties that I plan on renting out. So yeah, not really big into real estate, but I do know that I want a few properties. So those how my insurable interest would change over time.
Yeah, definitely want to add some properties, but I want the trust. I want the trust first. I need the trust, and we can build from the trust. The trust is mandatory.
Definitely. Definitely, especially being in this business where finances is so interpersonal and people don't like to talk about it.
Yeah, I don't want any properties in my name. I want it to be in the trust only. Yeah.
Definitely.
I agree.
Yeah, that's a smart move.
I
Smart.
definitely agree.
So we talked about, again, what was insurable interest for those of you who may have missed it. We did a little highlight review. And honestly, because one, Melissa wasn't here, so we felt like we needed to have her here. And two, honestly, my voice was so last week, and I always want to feel like I'm bringing my energy. So now I'm better, and we wanted to make sure that we had that review and for you to think about like what are some of the things that you have right now that are insurable interest to you. If you are watching this podcast, I am pretty sure you are an insurable interest and you have insurable interest. And if those things are not properly protected, think about how will that affect your household and what can you do to change that narrative. Any input on that? Well, I'm dancing in my seat, y'all.
um,
Um,
input. Go ahead,
right now,
Liz.
my biggest insurable interest, to be honest, besides myself, is my car. Because a couple weeks ago, as you know, we got into a car accident. We got T-boned, and
I totally forgot about that.
the other driver did not have insurance.
Oh wow.
Thank God we do. And so you want to make sure you have that if you get hit by an insured driver that you're covered. So thank God that we had that in place. So we're dealing with all that good claims and stuff right now. But definitely my car, because my poor bumper is hanging off right now.
Get it. But and I'm looking not to, I don't like to pour a lot of rain on things, but I like to think of things in different perspectives and how they could have went. So if you were T-bone, right, God forbid, and what if that turns something serious? Not to the point where someone passes away, but to the point where you are critically injured. Did you have some protection in place for your insurable interests, such as your life and your car? Like it's two different things here. The car, of course, we want that protected because that is our means of transportation. That's our money maker, right?
Right.
But what if something happens to you where you're critically injured? Then what plans do you have in place that would not lead you into debt, lead you into more stress, feeling anxiety because now you can't pay your bills. On top of you have a car that's totaled, and your body has to kind of restructure itself, and you're not able to jump back in.
And, I think a lot of people don't think about it, but having life insurance, even if it's a simple term insurance, they have those term insurance that have living benefits in place, chronicle, critical, terminal, you know,
And
and
term insurance that has return to premium, but everybody don't talk
oh
about that.
yes, yes,
Yeah.
yes, 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 yes. That's something we
That's
could
gonna
talk
be
about.
that's gonna be
That's something we
another
can talk about next time. But yes, you want to, a lot of people don't think, you know, if something happens to them and they survive that, how they're going to, make sure that everything's taken care of. Well, you have these, products out there that can make sure that, you'll be taken care of. So
definitely,
if you
definitely,
haven't heard of living benefits, or if you have a policy and you don't have any living benefits, get with an agent as soon as possible.
definitely. Now, this was a very interesting topic, but before we kind of wrap it up, I wanted to touch base on the ethical considerations. Now, insurable interest provides an ethical framework for insurance. It prevents individuals from benefiting financially from the misfortunate or death of others without a legitimate interest. This ensures fairness and discovers fraudulent activities or attempts to exploit the insurance system. And Raquel touched base on this, but in case you need me to break it down, the simplest form, think about Lifetime and think about the movies, the crazy movies where the husband is trying to kill the wife or the wife trying to kill the husband or somebody just to cash out on the insurance. And they are unsuccessful. That is what we consider ethical. Like Raquel said earlier, you cannot just go get insurance on your friends or your cousin that has cancer and you don't even talk to them, but you just want them, you want to benefit from their misfortune. So, yes, I just wanted to reiterate that because insurance is the FBI.
Mm-hmm.
They, they will do everything
Oh,
possible
yes,
to
that they are.
figure out what happened before you are cashed out, and it has to make sense.
Yes. Don't lie on your application and say you never smoked, because underwriting is going to find out that you were caught in seventh grade smoking in the bathroom at school. They're going to find out.
Definitely,
They're
definitely,
going to know. They're going to know.
they will know. I really do hope this put some perspective and shed some light on those of you watching, because we want your insurable interest to be protected at all time, and also understanding that insurable interest acts as a critical safeguard, ensuring that insurance operates on fair principles and protecting the integrity of the insurance industry as a whole. It is a fundamental requirement that establish a genuine connection, financial stake between the holder and the subject of insurance. So it's really no clear form. We're not going to be doing a part three on insurable interest. You have kids, you have insurable interest. You have, if you are a homeowner, you have insurable interest. If you have stocks, bonds, you want to start building trusts, wills, things of that nature, then of course you have those insurable interests. And it's really very much self-explanatory if you ask me. What do you ladies think?
I think that it may be self-explanatory, but even if it wasn't, you watch these 2 episodes and now you will understand what insurable interest is.
Yes, you have a child with someone, protect that other parent. And we talked about that in the first episode, part one. Definitely protect that parent.
Yes, ladies.
Yes, we did see insurable interest was so simple, and you don't have to dig too much deep into it. Right now, we are really kind of giving you all the basics in these series because as we continue, we are going to continue to dive deeper into what life insurance plans are out there, what retirement plans are out there, how you can start building your financial vehicle. I say it like this all the time, make it really simple. Look, you're not going to take a road trip and not have your snacks. not have any change, no money in your pocket, and no GPS. So, how are you planning to live your future without making sure that you actually put some plans into place?
Exactly.
And that's the simplest terms that I could really put it for the people. I really do appreciate everyone that has tuned in on this live stream. If you are watching the replay, make sure you comment below you watch the replay. Subscribe to the Growth Hour. Don't be afraid to let us know what you want to talk about as well. We want to build this community and make it interactive and make sure that we are touching bases on the things that you want to learn about or have some questions and you need some clarifications. You can always set up a appointment or a conversation with the person that invited you here or shared this link. We really do appreciate you here on the Growth Hour as we continue to go towards our mission in creating impact for you to make smarter financial decisions. That's all we really have for you all tonight. It was going to be a semi-short one. We will be back next week. It will go back to our regular programming schedule, 8 p.m. Central Standard Time, my time. It is 9 p.m. Eastern Standard Time.
And 6 p.m. Pacific Standard Time.
Yes.
That's all you had. That's all you got from us, your host, Lynn Trina, your financial friend, Melissa, and Raquel. Until we sign in again, we are signing out. We love you all. Continue to support us and make sure you share this video with 5 other people who can use these resources and actually start building their own financial vehicles.
And one last thing before we go, we hope that even in the smallest way from each episode, you continue to grow. Thanks and have a great night, everyone.
Good night.